Hey, it's Wolf here. Hey, absolutely love to have you here. So in this video, I'm going to cover the psychology of the market cycle and apply that to this current cycle that we are in. So this is super helpful because this allows you to see kind of like what's going to happen next. Okay, so let's get stuck in, and this is super important. So make sure that you watch this whole video. So in 2018 December and to 2020, that's when the boring loss of the last market cycle, 2018 to 2021 market cycle happened. And by the way, this is Ethereum chart. Now, there was the crash point here, but I didn't have enough room to show you here, but the crash happened basically from 2018 January to 2018 December. So the crash was around 1 year, okay? And then we had December 2018 to 2020 February, boring lows. Okay, basically boring lows means that nothing happens. It ranges between the prices, and that was around 14 months. And that's when the bullish momentum started in 2021 after the COVID dip, and that lasted around 9 months. So we had 1 year here, and then we had around 14 months, and then we have 9 months. So it's around 3 years. And that's when the euphoria of 2021 bull run started. Okay, and euphoria is the phase where everybody just wants to buy because there's tons of people making money, and it just like becomes this kind of like mass psychosis where people just like get in the markets and buy. It becomes very irrational, and everything becomes super overpriced. And after that after that happens, everything has its opposite and equal reaction. So like you can see here, we started this whole craziness in the momentum, and then we went all the way up here, and then the crash will happen, and we basically come back to the same. That's when everybody realizes, okay, maybe this was way too overvalued, and kind of like the hype dies down. And then again it starts. If we start right now, we are in the boring lows. It has been, so the boring lows kind of like started in May 2022, and right now as I'm recording this, it's May 2023. So the boring lows has been going on for around 1 year right now. Okay, and this point was from, so the crash was November 2021 to May 2022. Okay, so you can see, so January, February, March, April, May. So now this time it took only 5 months for all of that shit to unfold, right? 5 to 6 months. And here it was like 1 year for it to come back down to these prices and then slowly grind here. So right now it has been going faster. It seems that it has gone faster right now, and right now we're in the boring lows. So right now, what I want to show you, and the purpose of this video, is that right now we are in the boring lows. So it can happen that the boring lows continues. Okay, for example 1 year, we'll grind down for 1 year. Okay, that's the one outcome, and then the momentum starts to build up. Okay, or then right now we are we will have this kind of like last dip, and then the momentum starts to build. Or the third one is that we will the boring loss is coming to an end, and the momentum will start pretty soon. So those three of the outcomes, I think that like 50% probability that we will have a last kind of dip, and then the momentum starts to build. 30% is, in my opinion, the probability that we will continue this boring lows, and then the momentum starts to build. And the third one is that the momentum starts to build very soon here, and that's around 20% probability, in my opinion. So that being said, so what, in my opinion, all of my multimillionaire mentors are basically in the markets right now, and I'm in the markets. So right now the boring lows has been here. We have been grinding non-stop for 1 year straight. So right now the prices are super bottom prices. So right now I believe, I'm not a financial advisor, and this is not a financial advice, but I believe right now is super great time to start acquiring assets if you already haven't. Okay, in my opinion, everybody should start acquiring assets already in the space, because like I said, when the momentum, you can see here when we had the last dip, and then when the momentum starts, that's basically where you can still acquire here assets. But this is only ETH chart, so there's the assets behind these pump in different like time frames, but you can still acquire assets in the momentum phase, but it's very hard to build super like a build position and super durable portfolio in just a very short period of time. You kind of like need time to build it, like to study the peaks, build position slowly, to understand what you're buying, and etc. So it's very hard to do it fast, but you can do it fast in the momentum phase. But none of my mentors do it. They always like the boring low is when you want to build the positions, and then when the momentum really starts, that's when you really you already want to kind of like have your portfolio done, and then you just chill, laid back, and let the market do its thing. Then at some point we will have this crazy euphoria spike here, and that's kind of like the first wave, and then we most likely have a second wave. Okay, and it can manifest in different kind of ways, like it can go super up, then a little bit down, and then again. So you have to play it by the ear. The next bull run, it's not exactly will go like this. You can see, for example, here it took only 5 to 6 months for the crash to happen, and in the last bull run it was like 1 year when that crash happened. So take it as it is, but you can see that it's pretty close, and the reason, by the way, this repeats is because there's a saying that history repeats. History doesn't repeat, but it rhymes. It's not that history repeats, it's that human psychology repeats. Like people have cognitive biases in their brain, which are basically miscognition, which basically means are like old biological basically programs that helped us when we had low amounts of food, right? Glucose to our brain to function. We had low amounts of that, so brain made these kind of like shortcuts to thinking. So like, will you eat this berry or will you not eat this berry, right? Because if it has, for example, or will you do this or will you not do this, basically. So you don't have to use a lot of energy to think. You can use the shortcuts, like if it has sugar, yes, so it's automatically yes. So for example, this kind of like, when you have a lot of these kind of like miscognitions bearing on your brain, more than 5, it becomes lollapalooza, and then basically you are sold. Okay, you have this feeling that you have to buy, even though you don't know why you want to buy it. For example, in the bull market, a lot of people buy, like, think about here, this is the crazy part here. In the in the bear market, not a lot of people will buy. The most smart investors buy here, and then they sell in the highs. So basically what you want to do, by the way, is buy when it's low and sell when it's high. 99% of people buy when it's high and sell when it's low. So don't do that. Anyway, so so when the bull run is at its highest, that's when basically there's most risk, and that's where people put most money in. So try in the next bull run, as I mentioned this right now, try to engrave this into your brain. So when the prices start to go up, don't add any more fiat into your portfolio. So all the fiat and all the money that you want to get into the markets, you should apply it here in the boring lows. When this happens and the craziness starts to happen, try only just take money out. Because one of the biggest mistakes is that when the prices go up, people have this miscognition and they start adding even more money into it because they become greedy. Okay, so anyways, the point of this video is show you we are here right now. Okay, and the next part, what is going to happen is momentum, and then euphoria, and then again we will have crash. So one of the things that I cover in the membership is always take profits. Like, take profits heavily. There's nothing wrong with taking profits, and the thing here is that if you don't take profits, you will not take profits. Okay, and that it again, a lot of these things are super basic. Like if you look at Warren Buffett and Charlie Munger, they say that they are not, even though Warren Buffett is super intelligent man, like he's super smart, but they say still that they are not super smart. It's not that because they are super smart, it's because they avoid making mistakes, like miscognition, to fall to prey on these cognitive biases. They avoid that, and when everybody else, 99% of other investors, do the mistakes, it's very easy for them to be profitable. So you don't have to be the smartest to make millions of dollars in the crypto space or in this in any market. You just have to avoid the mistakes, and that's where the big money is. Anyway, thank you so much. I'm not a financial advisor. I hope that this helped you, and thank you so much, and peace out. Thank you.